I would argue that fundamentally we are in a better position right now than ever before. I mean, of course, you still have a ton of BS in the industry. You have the entire meme coin sector where intersubjective culture coins, whatever meta, and like memes have like a validity to be part of this industry. But of course, the euthanasia roller coaster dynamics, the whole meme coin sector has taken upon itself over the past 12 months, inevitably led to 99.999% of memes bleeding out and just becoming completely irrelevant. And I think people who are pretending that there's genuine interests or just completely naive and are just trying to talk their books to save their bags.
This is like something that I find a little bit more interesting, is that so far in November we saw an outflow out of the Bitcoin ETFs. It shows a certain sentiment in the market that even people are willing to leave Bitcoin ETFs, or like exiting it, as well as the ETH ETFs. Even though I have to say that the ETH ETF meta felt a little bit forced, to be very honest. We are live. First time that we are live on this channel. And with that being said, welcome to State of the Trenches episode number 2, with a very catchy title, which is the bull run officially over? Because after a rocky start to November and a skipped Uptober, crypto markets have investors wondering if the cycle is running out of steam. And in this episode, we dig into the data, staking ratios, ETF flows, price predictions, all of that. But we are also having a brief look at the broader stock market, because there has also been some activity over there. And then all of that to separate the signal from the noise. And then we are also uncovering one of the most recent incidents in the DeFi market. But we are also having a look at our beloved Atom versus ATONE conversation. So no hopium, no fluff, just what's really happening in the trenches. And with that being said, I'm welcoming my guest today, which is Max from Odyssey. How are you doing, sir?
Thanks a lot for having me, Yuri. And yeah, I mean, given these circumstances, I have definitely felt better a few weeks and months ago because I'm down bad on pretty much every single position I've recently opened. And of course, almost sidelined on the only runner of the past weeks, which has been Zcash. I think I bought like one Zcash token on my Binance account when I entered crypto years ago. But yeah, have not looked into that for a long time. So probably in profit with that one, but everything else down pretty bad. How are you doing?
To be honest, since I'm just looking at CoinGecko and CoinMarketCap once in a while, actually just once a week for this format. Yeah, I haven't really felt it so much, to be very honest. And also, it like my portfolio is probably one of the most boring ones in the industry. A lot of BTC, lot of ETH, like actually just slightly ETH these days. Actually, yeah, it's just BTC, a little bit of ETH, a little bit of Sol. So nothing much has happened there besides also prices going down there. I'm just also waiting for more people to join. Perfect. But yeah, this is actually, so again, this is the very, very first time that, with 1 second, just adding Odyssey here. Now, yeah, that's the very first time that we are live. So some things may break, but I hope not. It's very, very nice to be live on X for the very first time after all of this year. Yes, and it's actually one of my first live streams since I think like 2022. So it's good to be back in this live stream format. But without further hesitation, let's have a look at the bloodbath. Fear and Greed Index, not that I'm a big believer of that. It looks brutal. It looks like the beginning of a bear market, and everything just went down. BTC is, just went below the 100K benchmark, which is obviously pretty painful, but the rest of CoinMarketCap doesn't look much different either. But we also have to take into account that also the stock market went down, right?
Yeah, but I mean, compared to crypto, I would say the stock market is still very much at its highs. I'm just pulling up the S&P chart and looking at that. It seems like it's down 2.5% from its all-time highs, and the Nasdaq 4.5% from its all-time highs. So, given that they just made new all-time highs last week, actually, I think crypto is certainly underperforming, and that is something that I personally find very concerning because over the past weeks we have been in an environment where risk assets, especially tech stocks, have been performing pretty well, yet Bitcoin and other crypto assets have been lagging behind and significantly underperforming, even though the macro landscape and sentiment has been rather positive. So yes, it's definitely a pivotal market phase right now. Do you think the bull market is over, or what is your outlook right now?
I'm questioning whether we really were in a bull market all of that time. We have had this conversation on the Odyssey podcast in the beginning of the week, and it's kind of like the current market sentiment is confirming my concern a little bit because, yes, Bitcoin really made big moves. But besides that, I mean, also Solana had its big comeback. And if we leave out hype and BNB and obviously the meme coin trenches, like the significant layer ones that push the space really forward when it comes to DeFi activity, which is the number one use case for blockchain, right? Which is finance, and all of the other things are often also trends that come and leave or not leave, but become less significant. So, for example, NFTs have been a huge thing in 2021, and yes, NFTs are still there, but it's not something that is carrying the industry like DeFi. I would say DeFi is still the number one indicator for everything that's happening. We had meme coins this cycle, so to say, but also meme coins is not carrying the entire industry right now, and probably, hopefully, this won't ever be the case. So yeah, I'm really questioning if all of that was really a bull market because it didn't feel like it. We also talked about it. There have been more people being released from their jobs in the crypto industry than getting onboarded. And that's something that's just, all of that is just very concerning. What do you think?
Well, I think there are several points to touch on. First of all, I would say yes, we have not seen a bull market in the classical sense of 2021 or 2017. I personally do not think it is very likely that these scenarios of back then will repeat. And there are several reasons for that. First of all, you have the whole altcoin dilution effect. You just have way more coins, and that obviously takes away momentum from individual runners. I think some people over attribute importance to that factor because yes, last cycle we maybe had 1,000 or a few thousand coins, and now we have a few million coins, which is several orders of magnitude higher. Yet, like an even higher relative percentage of these several million coins are completely dead and irrelevant. So, no significant capital is even looking at these longer tails of new altcoins. So, yes, it is an important variable, but I think some people definitely overstate its importance. I think other factors we need to pay attention to is just there was a very big coincidence with the 4 year cyclicality of crypto and COVID happening 4 years ago, which led to
Yes.
millions of people sitting at home, being bored. The whole narrative of financial absurdism and financial nihilism being in its early stages. And we had helicopter money being dropped to people in the US by the US government. So you really had a combination of factors that created a unique opportunity for people to ravel around crypto. And other than that, the hype around the industry was also much higher. And there was not much else on the technology frontier to be excited about that was so easy to convince people of. If you wanted to be hyped about biotech, you had to be in the weeds of the industry. And for crypto, you had YouTubers, influencers spinning up left and right. I remember the days where every single Bankless episode had 250,000 listeners. Some of them probably even hit a million with prominent guests on back then. And ever since we've seen some cataclysmic collapses in 2022, most important Luna's UST, which kind of killed the retail appetite for on-chain participation, and then FTX, which killed the retail appetite for
Yeah, that
participating
was
on
the last
centralized
hit.
exchanges, and then also a ton of regulatory crackdown in the US by the Biden administration, which just led a lot of qualitative DeFi projects and crypto projects center towards Europe. And I mean, the US is still the most important market for capital flows and venture capital funding. So that definitely set the industry back quite a bit. And I would argue that fundamentally, we are in a better position right now than ever before. I mean, of course, you still have a ton of BS in the industry. You have the entire meme coin sector where, I mean, I'm a subscriber into like the whole intersubjective culture coins, whatever meta, and like memes have like a validity to be part of this industry. But of course, the kind of euthanasia roller coaster dynamics the whole meme coin sector has taken upon itself over the past 12 months inevitably led to 99.999% of memes bleeding out and just becoming completely irrelevant. And I think people who are pretending that there's genuine interests or genuine cults around these memes are just completely naive and are just trying to talk their books to save their bags. Because, I mean, if you want to compare the performance of SPX versus the actual S&P, you would have been better off just like holding the thing SPX is trying to make a parody of. So I think that is quite ironic. And yeah, I was at DAS London and also Token 2049 in Singapore in October. And throughout both of these conferences, I think that a lot of the attention, especially of the relevant players who have a lot of capital, who have existing distribution of their financial products, they're much more on the institutional side. And the institutional side is interested in Bitcoin as an asset and Ethereum and Solana and like the broader EVM, particularly Base, as infrastructure and technology plays. So I think that also reflects in the price development and like relative performance of Bitcoin versus most altcoins. I mean, you cannot argue that, yes, I mean, Bitcoin is dipping right now as well. It's down like roughly 20% from its all-time highs, but it's not looking even close as bad as it's looking for almost every altcoin. And
Yes.
the institutional capital flows and like the kind of TradFi normies getting onboarded into the industry, they are still interested in Bitcoin. And I do not think that we are in a confirmed Bitcoin bear market. There's no sign of that. Every single macro narrative in terms of dollar debasement, liquidity flows, trying to get an apolitical and like geographically agnostic asset, all of these theses for Bitcoin are still 100% intact. And I think that they are intact more than they are ever before. But just because institutions are starting to use blockchain infrastructure also more in a public sense, that does not necessarily translate into price appreciation of Ethereum or Solana. I mean, to offer a similar but imperfect comparison, if you look at a lot of the internet infrastructure protocols like HTTP or some of these like 404 or whatever standards, these are incredibly important for everyday internet traffic to flow through. But in isolation, the companies that built these standards and that maintained them are not even like somewhat comparable close in value to the relevance that these standards have. I mean, of course, for ETH and Sol, it's a little bit different because you still have a utility of these assets as a commodity like gas asset. But of course, just because some fintechs are integrating like some applications of theirs or access to crypto on Base, that is not going to, in isolation, catapult Ethereum to $10,000 a coin. And yeah, I think without the growth of retail participation in the industry, the remaining industry native participants have just had a very hard time trying to push their coins and like their favorite magic internet monies back to the all-time highs of 2021.
Yeah, agree on a lot of these things, but I also want to take into account that there are also a lot of soft factors. So obviously you're talking about the hard indicators and the hard numbers here, but it's also kind of a thing what's like basically happening in the trenches, and it also feels that there's a lot of people leaving the industry. It didn't feel that there's like that the industry really innovated in the cycle. So again, last cycle was like in 2021, there was like huge catalyst, which was DeFi. It was what the fuck is going on? Now we are able to borrow and lend cryptocurrencies or do liquid staking. So these were like major milestones in the industry. Before that, we had ICOs. So all of that led to more users joining the space because all of that was so exciting. Also, NFTs was like something that was innovated between 2017 and 2021. And now, I mean, what were the big innovations? It was like restaking, maybe, which is also not super innovative, but I think we also reached a certain ceiling here. I mean, yeah, breaking news: the blockchain is mostly for finance. But yeah, let's actually have like a look at some more numbers here besides the prices. This is like something that I find a little bit more interesting is that so far in November we saw an outflow out of the Bitcoin ETFs. It's I mean compared to the inflow that we have seen towards the end of September, beginning of October, anticipating this Uptober moment, so to say. It's not that severe, but I think it shows a certain sentiment in the market that even people are willing to leave Bitcoin ETFs or like exiting it, as well as the ETH ETFs. Even though I have to say that the ETH ETF meta felt a little bit forced, to be very honest.
Yeah, I think the ETH DATs had a disproportionately higher influence on ETH price performance than the ETFs. I still think it's good to give like standardized access to traditional finance capital into the major coins via ETF. So I think the ETH ETF still is a net positive, but yeah, the relevance was certainly overstated. Even though I think in crypto internal circles back then, the hype of TradFi supposedly being more interested in ETH than in BTC. Like it was much higher than around the launch of a Bitcoin ETF, which I think was in early 2024 or early 2023. I don't remember precisely when it was,
The
but
first ETF announcement,
yeah.
2023, end of 2023, that was like the push
Oh yeah, I
through,
remember. Yeah,
through New Year's Eve, so to say.
because everybody in crypto, I still remember all of these like bankless podcasts with various guests back then that were talking about the ETH ETF. The base case for the ETH ETF was always, well, Ethereum has cash flows because it has a staking yield. So like everybody in TradFi likes cash flows, and well, apparently these people on these podcasts assumed that nobody is looking whether it's like coming from actual revenue or whether it's just coming from new issuance, and that nobody would care about that, which apparently people do care, and apparently TradFi people do realize that just an adoption of the technology and like improvement of the kind of fat app thesis versus the fat chain thesis, which was quite a big discussion a few years ago, is not going to translate into up only price performance for Ethereum. And yeah, I still do think that Ethereum, given the progress of the technology and the adoption, is a relevant asset to hold. Like if you want to participate in the on-chain ecosystem as a TradFi or fintech or crypto native player, you should hold some ETH. Like that is not even up to debate. Like in terms of being able to run your own validator, and there certainly is a correlation, at least, between overall adoption of the ecosystem and growth, and like yeah, potential for upwards price action in the asset. But people have to keep in mind that there is no like deterministic causality. It does not work that way.
Yeah. No, fully agree on that. And just we will talk about our beloved crypto asset Atom in a bit. But I was like so shocked, so almost like embarrassing for me as like a long-term cosmonaut, so to say. I knew that inflation was the biggest driver of staking rewards in Atom. I mean, I was not naive, but I wasn't aware like how much their inflation was used for that. And I just learned that even like in the bear market of 2023, when I thought, okay, there isn't much basically issuance, their staking rewards a little bit dried out, and I mean, not staking rewards were dried out, but the price of Atom was like relatively low. The hub spent. What do you think? Just from on top of your head, what do you think? How much did the hub spend on security? Just the
So
stakers.
in do you
Staking
have a
rewards.
like over which time period exactly?
2023.
So for 1
January
year.
1st to January 31st.
So I think Atom back then was between like $10 to $15,
A little bit
and
lower partially, but yes.
uh, I would I have no idea what the market cap or the FTV was back then, but probably around, it was still in the multi billions, I think. So let's assume at a 5 billion market cap, 7 billion FTV, and the staking rewards were, I think, around
I'm just
20% or
asking
like
for your gut feeling.
18%.
And like if like I also did the napkin calculation and it's not funny, but just say a number.
Let's say 700 million.
Not that severe. Not that severe, but north of $200 million. And I found it so shocking because nobody used it. There was no like there were like the first side chain, the first interchain security chain was built out. That's it. And there was like hundreds of millions were used to secure that. And that's exactly what I just wanted to confirm with your thesis here is that if you talk to someone in traditional finance and they say, hey, yeah, there is some yield. Yeah, where's the yield coming from? Oh, yeah, from inflation. Okay, how much is it like? A million, 2 million, 5 million? No, no, no. It's like hundreds of millions that we're just printing out of thin air. And there is no driver for that. There is no innovation taking place.
Well,
That's
to
actually
be fair, I think Atom is one of the most egregious examples because even if the Cosmos ecosystem had grown, that would not have led to any burn or demand for the Atom token. Whereas with Ethereum, post merge, there has been a pretty lengthy period where Ethereum was net deflationary. It wasn't hugely deflationary, but the costs for transactions and gas fees that got burned definitely exceeded the new issuance. It has flipped around, and I don't think that this is a big issue because like inflation is not like in the like concerning percentage amounts, and I think the extreme costs of gas fees for ETH are or were a way larger prohibitor of adoption than like now pivoting back to inflation. I think that was like the inability and like the reluctantness of Ethereum and the Ethereum Foundation to focus on scaling the L1 in 2022 and 2023 and reducing gas fees for transactions is one of the largest reasons why the on-chain economy, particularly in DeFi, is as small as it is today in terms of users. Like nobody ever, regardless what's your net worth, there is no reason to pay multiple dollars for transactions. There simply is no reason. Like if you want to advertise yourself as a technology that is making everything faster, cheaper, more transparent, permissionless, whatever, yet
by
I
spending
can spend
hundreds of
like
millions.
yeah, I mean you're spending hundreds of millions in security budgets for nothing to be secured, and some other chains that are being used are confronting you with $50 or $100 gas fees. Like that is insane. That doesn't make any sense.
Yeah, what were we thinking back then?
Well, it's I think the issue there is that a lot of the crypto OGs are simply delusional and they have lost any connection to the reality of life that most people are facing, and even that like normal participants who were not early and were not lucky in the industry are confronted with. Like if you are making a rational financial decision and you want to like proactively and productively use your capital in DeFi, and you have a portfolio of, let's say, mid 5 digits, and you want to maybe do some super basic lending on Aave or whatever, or like borrowing against some of your assets, and you're paying $50 or $100 for a single transaction, like you are probably going to end the year in a net loss because you spend more money on transactions than you're going to be able to make in yield at like a regular portfolio size. I mean, if you put it into relation into the like average net worth across the globe, and even if you take out all the third world countries, I mean, even in Germany, even in the US, even in France, the UK, whatever, like there's not people running around left and right with millions of dollars in crypto who these gas fees don't impact. And just this reluctance and this delusion and this ivory tower behavior, I mean, I still think that some of that is contributing to the low number of absolute users that we are having right now. It's of course not the sole reason. I don't know, I would say that over the past 12 months, a lot of things have improved at the Ethereum Foundation, and also in terms of the UX and the UI of DeFi, yada yada. But and still, we have been confronted with other issues, industry internal ones, like the whole meme coin extraction games, which have a year ago been unilaterally been hailed as, yeah, we are now tokenizing culture and we are breaking free of the evil stock market. Yet all of these things have, well, pretty significantly underperformed the stock market. Most of them are down like 80-90%, whereas the stock market has, I think, made almost record highs, record returns year to date, which of course is not sustainable either. And there's a lot to be said about the sustainability of the asset economy in the traditional finance sense. But still, to pretend that we have come true to like the initial goals of the industry, there's still a lot of room to grow and a long path in front of us.
100%. And also what you mentioned, I loved it how you mentioned people lost the connection to reality a little bit. And it's so true, because the moment, like I remember when I started to question all of the app chain thesis and the staking rewards that were coming from left and right. The first time I questioned all of this was when I got a girlfriend, and I talked to her, and I talked to her friends about what we are doing, and they basically just ask basic questions. Okay, so staking, what is staking? Okay, where's the money coming from? Yeah, ideally fees. Okay, so many fees are getting generated, and I was like, oh, wait a moment. This is completely unsustainable right now, even though we're in a bear market. So yeah, I think it was like a forced aha moment. That's like the thing. There's like still too much crap like lying around in the industry. And we had like this conversation before in Odyssey. You said how much pain is still necessary. Everything went down more. I mean, I wouldn't be surprised if we even go minus 30-40% on everything even further, or even more severe.
If the bull market is over, I think for most altcoins it will be even more
Final death
downside.
sentence.
Yeah.
Let's have a look. Speaking of altcoins, just to complete that chapter, there's like one thing that I always look at from our friends from Staking Rewards about the staking ratios. Interestingly, staking market caps, I mean, it looks super brutal with the minus 16%, but it's also because obviously the price also went down. So there's a certain correlation between here. But still, you also see that, for example, there has been a significant outflow, for example, on Solana. But yeah, staking itself, is like, it was like interesting because in 2022, even though prices went down, staking ratios went up. And right now there is little interest in staking the native assets directly. I think the big adoption curve is really happening within the DATs, within the ETFs. But yeah, as mentioned many times on the show, there is like a big consolidation wave coming, and most operators have like a super hard time. I mean, just look at this. We are talking about a lot of validators, and they are just experiencing 7-day ratios where their revenue goes down by 20%, and we have this on a monthly basis partially. So that's just a super super hard competitive business to be in here. Many people were super dependent also on Matic, and it just made minus 25% within a week.
Arguably, validators got vastly overpaid, especially in the case of the Cosmos ecosystem over the past years. So, I mean, if you look at the headcount of some of these businesses, and like, I'm not saying that these are malicious actors or extractive actors. I mean, many of them have contributed quite a bit to the overall crypto ecosystem, and they've been doing a good job at that. But I mean, I noticed that in Berlin as well. You have like tons of people in this environment and in this city here who are good actors, who are smart people, who are ambitious, who want to contribute to something. But the companies or projects they are working for are simply not solving any existing problem. Like there is no way these things in a even somewhat efficient economy can sustain themselves in the mid to long run. And I think we are seeing that for a lot of chains, for a lot of validators, and also for like a lot of application attached coins right now. I mean, in terms of staking ratios not growing, I think the only people still actively participating in staking are like existing validators, existing on-chain actors, which is a user group that is continuously shrinking. I have not seen a single person in my like personal surroundings like getting onboarded into DeFi or the on-chain economy over the past, let's say, 2 years. I'm still like the kind of leader of a blockchain club at my university, and I remember back in 2022 in spring and summer, there were some like online meetings where 200, 300 people joined from the alumni community, and now you probably wouldn't even get 5 together. Like the retail interest, even among people who are financially literate, has decreased by a lot. And just to touch on the point that you just made, where you try to explain kind of to your normie friends and your girlfriend how all of this works, I would say that if you would have had this conversation in 2021 or 2022, it would have been so much easier to accuse you of participating in kind of a Ponzi economy if you compare it to now. Because I do think that by now, if you look at DeFi and the on-chain economy, we have been able to get rid of a lot of this stuff. I mean, there are still tons of shady things going on. I think the stream finance implosion that we saw earlier this week is
let's talk about that. What happened there?
Yeah, so basically, Stream Finance was a gray box vault. And over the past months, we've seen a lot of vaults spinning up in DeFi, which essentially act like on chain hedge funds. Some of them are actively managed in a discretionary manner, some of them are managed just by algorithms. So the simplest implementation of that would just to be a lending aggregator. So you put capital into a vault, and the vault has certain risk parameters, and it's rebalancing algorithmically between different like Aave, Euler, and Morpho pools on the lending side, depending where the highest yield is right now, adjusted to like the risk parameters that are given into the vault. And then on the riskiest side, you have stuff like Avant or stuff like Stream, where it's a gray box and not all strategies that are underlying to the capital that is locked in the vault are being disclosed. So there have been some public wallets for Stream, and I think Avant, in response to all of this drama, has also released a pretty good transparency dashboard a few days ago, where you are able to follow the strategies that they're actually executing. But of course, especially if you're forming with size, if everybody knows about what you're doing and can live monitor it and copy trade you, your edge will dilute. And what Stream Finance did, they were doing a lot of basis trading, so essentially going long some spot assets and shorting derivatives. Sometimes if you were able to set up funding rate arbitrage, so if the derivatives and their funding rates on different derivatives dexes were not the same, you were going long on one and short on the other. And they were also forming a bunch of points programs of other DeFi applications and other perp dexes. And the founder who was running Stream Finance, X Law, I knew him personally, and he was an extremely smart guy. very involved in the industry. He was only 21 or 22, so like very young for managing that amount of capital. And of course, what they were doing was very risky. But the point where it became like kind of a death sentence or like a Damocles sword hanging above stream finance as a protocol was when they started to lend money out to third-party actors that might have been TradFi funds who were doing market making, or kind of TradFi X crypto funds who were doing like market making on decentralized exchanges. The TLDR is that they were ending up with a 93 million hole, and nobody knows how impactful this 93 million hole is going to be, because there are no insights into where this hole actually was coming from. Also, if this hole was relative to the total user deposits into Stream Finance, which were roughly between 160 to 170 million, or if these 93 million are relative to around 500 million, which was the TVL of Stream. Because what Stream did, they used the receipt token XUSD, which you got by depositing into Stream, and they were looping it up. So they were supplying it on lending markets, borrowing other stablecoins against it, and then we were buying or minting more XUSD with that. So they were not technically under collateralized. So I think the people who are trying to compare Stream Finance to Luna and UST are in the wrong here, because it's not like created out of thin air, but it's definitely an inflated TVL, which is not corresponding to the actual amount of user deposits. So there definitely is something shady going on, but it is not by strict definitions a Ponzi scheme or like anything in that matter, as you could have argued about Luna and UST. Also, they were quite entangled with Elixir's DEUSD. So what they did there is they basically used XUSD to mint DEUSD and inflate their TVL. And then in return, Elixir would use their minted DEUSD to mint more XUSD. So they were mutually kind of one hand washing another, inflating their TVLs to seem more impressive, to have like crazy growth metrics, etc. And in the DeFi bubble, where I'm mostly active, I mean, Stream Finance was like the hot thing on the block. Everybody was talking about it. People were doing napkin math on the potential Stream Finance airdrop, which, if October 10th didn't happen, which likely led to the blow up of that third-party fund they were lending money to, it probably would have been a pretty interesting play. But yeah, it is what it is. I just hope that nobody got hit too hard. There have been some rumors of like Zero X Law, the founder, threatening to hurt himself, whatever. I genuinely hope this doesn't happen, because I do think that even though he definitely implemented things he should not have done, and like he has been an absolute degenerate in terms of the choice of his strategies, like I genuinely believe that it is more likely than not that he's a good actor who wanted to see the depositors make money. And Stream Finance, it was his life work. It was the only thing he cared about. And yeah, it's a pretty tragic downfall of that individual protocol. And we've also seen some contagion spreading to other DeFi vaults and like vault curators, because liquidity was drying up pretty fast. Because the issue you've had build up in DeFi over the past months is that you had a lot of cross collateralization. So you had vaults being exposed to other vaults, so essentially acting as a fund of funds without really being advertised as a fund of fund. Like stable coins being minted with other synthetic stable coins, which were in turn also minted by other synthetic stable coins. So you had a lot of buildup of TVL, which was not really corresponding to actual user deposits and user inflows. And this is definitely a setback for DeFi, especially since it happened in the same week as
Yeah.
Balancer got exploited. I think it was on Sunday or Monday for 110 million.
I just wanted to add to that. It has been a very rough week for people in the DeFi trenches. Slap left, slap right, no? Didn't want to interrupt you, but...
Yeah, no, I agree. It was, I mean, specifically for DeFi, this week has been as bad as the Luna UST collapse. No doubt about it. I think, yeah. I mean, you cannot say that in terms of
volume and numbers, but I get your point, yeah.
Yeah, like this is 100 million and like a bunch of delevering and unwinding, and Luna UST was 20 billion, which is orders of magnitude higher. But the sentiment in the like DeFi power user trenches is insanely bad. The whole Vault ecosystem was DeFi's best bet to onboard institutional players. So now you have a combination of Vault shrinking, everybody in the Vault curation ecosystem just doing firefighting all week, trying not to get completely crunched. And you have one of the OG protocols, which Balancer is being exploited. All that happening in the same time frame, but is obviously very bearish for the institutional trust and the institutional appetite for DeFi. And I do think this will lead to a lasting damage and will probably set us back for a few months. I do not think that this is the death of DeFi or anything. I mean, farming will continue going on.
No.
Like the people who are still in
We have
this
seen
industry
worse.
are still like having a lot of risk appetite and they want to squeeze yield out of whatever. And I also don't think that Stream Finance was the last gray box vault or last gray box protocol to ever spin up. I mean, this thing in some different fashion will repeat itself. I'm very convinced by that.
Which leads us to the last question kind of a thing. So we started this episode with the question, is this bull cycle over? So is the bull cycle over? Or what do you think? What is your gut feeling? Are we just going down from here? If that's the case, what's your forecast, so to say? Or if there's optimism, what's going to happen? I mean, obviously, take everything with a big grain of salt, but just to have like some outcomes. So from my side, I think I can very much believe that we see like a small dead cat bounce here from here, like a small relief pump, so to say, but nothing too significant. But basically hinting, oh, okay, next year everything will be much better, yada yada yada, and then we really go deep into the bear market. That's my forecast, which is both positive because I think there is a last boat coming, but wouldn't be too surprised if there wouldn't be a second boat coming. That's what I think.
Yeah. Well, I would say that right now, ever since 2023, is probably like the most uncertain and like the wankiest time in the crypto market. All the bull market believers who have been shouting to buy every dip ever since bottoming in late 2022, it is much harder to have the same conviction right now as you were able to have it throughout the April lows, where the whole terror scare was happening, and throughout the entire year of 2024. So we are at a very tricky point. Gun to my head, a few weeks and months ago, I was abiding by roughly 70-30 probabilities that the bull market is still intact versus 30% that the bull market is over. I do not want to flip-flop, so I still think that just looking at the macro landscape, there is a higher likelihood than not to see a last leg up for crypto. Still, undeniably, right now, it looks like the 30% scenario happening is more likely than ever before in this year. So it is hard to keep conviction. And what makes it even tougher is that it is not like a cycle and sentiment where you can make the bet as you were able to do it previously that, okay, if just Bitcoin is able to recover and is going to make new all-time highs, altcoins are going to explode. So in terms of portfolio construction and positioning, I think this is insanely more difficult than last cycle. Because what do you want to do? Do you just want to hold BTC and just become like a very long-term oriented holder? I think
Maybe that's
then
the way to
why
win.
are you trading the cycle? Like you're trading the
Wait one sec.
cycle.
Do you know this meme still of this Turkish guy with the pistol and then the Korean one,
Yeah,
like from the Olympics, the one that's like the altcoin holders with DeFi pools and so on and so forth. That the Turkish guy is just holding BTC and just riding the
fully agree.
wave.
Fully agree. If I had just held BTC from scaling into it throughout 2022 and 2023, I would have had a much better portfolio performance than I ended up having right now, with like lots of DeFi alts, and even though like, you know, hyperliquid exposure and all of that stuff, it did not offset the opportunity costs of just being exposed to BTC as an alternative. Personally, for my portfolio, I am probably as heavily weighted into majors, so mostly BTC, also ETH, and some Solana and some Hyperliquid than ever before. That is in one part due to just buying more majors, but also in the other part because all of my altcoin longer tail bags are just down so bad. So obviously they decrease in the percentage value of the overall portfolio. So it is more a market circumstance than actual skill of being exposed to majors heavily. It is pretty tricky to have like any mid to long term bullishness on most altcoins I'm holding. Like I like the underlying projects of them. I'm mostly exposed to DeFi alts. I'm still having some meme coins where I wanted to play the whole financial nihilism and financial absurdism narratives, which I think in theory make a lot of sense. But obviously, since everybody in the meme coin trenches just like is perma raping each other, like it's very hard to see any light at the end of the tunnel there. In terms of DeFi alts, the growth metrics this cycle for Aave, Syrup, Euler, Morpho, whatever, Pendle, Ethena are looking pretty impressive. And I genuinely think that there are very good projects out there, which also have like liquid tokens available. The issue there is that these tokens do not convert into any standardized equity rights or rights to the like claims of revenues or underlying assets. I think once that is being solved, this will be a bigger catalyst for the industry than ETFs. And there are two projects that I know of working on that right now. It is by, you can find him on Twitter as Back the Bunny, Dimitri. He's working on Celetary.io. So they are working on kind of a securitization or like tokenization framework with, I think, via a Delaware LLC. So essentially, you do not get the same rights as an equity holder if you hold a token, but you have like basic M&A rights, so it makes it a lot easier to act as an activist investor. And I think the other significant one is by Mia Hedge on Twitter. He's building Street Foundation, and basically they are introducing the ERCS token standard, which is going to be a securitization token standard. So these two are the ones who are built by actors who kind of started from okay, we are coming out of crypto and like DeFi, and now we are moving into tokenization. And obviously you have a bunch of projects. I think it's called like securitize.it or like tokenize.it. There are a bunch of them who are approaching it from the TradFi side, who want to tokenize securities on the blockchain. And I think it's a positive sum game, so there's room for both to grow, but I do consider this a necessary step for DeFi tokens and kind of the app layer tokens to outperform and to make new highs, unless we see a combination of the Fed lowering rates and kind of a last gasp of macro exuberance and risk appetite playing out in Bitcoin and the longer tail of altcoins, which would coincide with most of the equity indices topping, which would probably coincide with like another stimulus check like movement by the US government. And then shortly after, probably the tariffs would have to be flipped by the Supreme Court. So that would add like another short-term inflationary and like liquidity begetting catalysts into the markets. But kind of the closer or the more similar we get to a 2021 like alt season, the more bearish it would make me on crypto for 2026.
Yeah, resonates with me. Resonates with me. And since and I think then we can wrap it up. Since we talked about the altcoin meta and that a lot of altcoins will die, one coin that has hit the news quite a lot these days is basically like kind of a fork that was going on. It's like ATONE and ATONE. It's just so hilarious, like looking at this picture. So what you see here is Jake One, co-founder of Cosmos. He left the core team a long time ago, and signing from Osmosis. And apparently it's not true, but there's like a kind of fork discussions going on, but also immediately denied it that the goal is not to create a fork. But you see that this, like, I really thought in the very beginning that Atom 1 is kind of a joke, or like I really didn't took it too seriously. But at least there is some fresh wind in the Atom 1 ecosystem compared to Cosmos, because the hub, Cosmos was going on last week, and yeah, I mean, there were like some discussions with some institutions, but nothing super productive came out of it, I would say.
Hmm.
Like seeing it from the far. But yeah, I just find it like so hilarious, this entire Atom One discussion. What do you think?
Well, unfortunately, I was also a pretty big Cosmos ecosystem bag holder until recently. Just a few weeks ago, I started to unstake the last ones of my Sybil wallets, where I had like some Atom, Osmo, Injective, whatever TIA staked across a few, and most of these are down very bad. Um, I missed the kind of dead cat bounce or short-term revival of the Cosmos ecosystem in early 2024 to exit these positions. Um, I was probably having quite a big bias towards that particular ecosystem because that's kind of where I started out in crypto, back in the easy old days at Friends Validator in 2022, where the Cosmos ecosystem was still pretty vivid. Um, in terms of this dispute, I mean, the whole discussion between like the Cosmos, like Interchain Foundation splitting apart, and like the co-founders. I mean, that has been going on for years now. I never paid any particular attention to it. I think that both Atom as well as AT1 are pretty toxic assets. I would not buy them. I would not touch them. I do not see any future for either of those. Like, there's no reason to use them. If you are an institution, you can either build on top of some EVM chain, which also has like way better institutional distribution and institutional appeal, namely Base, or just like build it straight on top of on Ethereum, or launch your own L2. Now you have these more TradFi and fintech focused change, like Plasma, Stable, and Canton Network launching. You have some of the fintech players and banks partnering with Solana. I mean, a lot of that stuff is obviously subsidized with like some grants and deals, but I mean, these foundations have orders of magnitude more money than the Interchain Foundation, and like these foundations also have serious people working at them. I mean, like, good luck, have fun trying to convince some private bank or institution to build on a chain which has like the weirdest and like most dramatic people in its ecosystem for the past 3 years, and one of the co-founders being a drug addict. Like, who wants to build on that stuff? I mean, seriously. um I do not see any future for it. If you want to spin up your own chain without kind of building the whole stack yourself, just use Celestia for DA. I mean, it gives you most of the benefits and much less work and much less hassle. Of course, like, Celestia is also um, still far from fulfilling its vision, and the demand that was anticipated for data availability and spinning up a roll up on top of it was much higher than it turned out so far. Yet, I think if you compare the two, Celestia is a more attractive model to do what Atom sort of tried to be doing. I still think the ecosystem in of itself, the user experience, it was not that terrible as many people said. Like, if I compare it to doing DeFi in the EVM, both have their pros, both have their cons. Yet, in terms of the culture and also just the structuring of tokenomics and the utilities of their assets, I think that Cosmos is an ecosystem that is not worth touching anymore. There is no traction. There's nothing going on. There are probably like 20 users left. I do not see any path of revival or any future.
Yeah.
How do you think?
No, I think that there might be some adoption, but I think that's also a very good transition to the final iteration of this episode, which is I will tell you my opinion on the next episode of Odyssey. Unfortunately, the next two rodeos I have to skip because I will be out of town. I will be at Devconnect Argentina. It's the one trip that I'm looking forward to for the entire year already. The crypto community is gathering in Argentina, and there will also be Sovereign Summit where I have the opportunity to talk to the new lead of the Cosmos Hub. So I will spend a lot of time there and try to find out, what's going on there. I mean, again, I've seen some news coming out from Cosmoverse this year. From the far, like the news made sense, but still, for me, the question wasn't answered that the hub, spent like hundreds of millions in security throughout the past couple of years, and who's going to pay for that? So there are like still some critical questions that I would love to get an answer for. And yeah, like if you're in Argentina, definitely reach out to us. We will organize 2 events. We will be speaking on stage at Staking Summit about the great consolidation in the operator space, and we'll also speak at Sovereign Summit and create a lot of content. So I'm so hyped for this conference week, and then I will tell you my opinion about everything, because then I have more context, more information, more background.
Very nice. Was great catching up and good conversation.
Good conversation. I wish you a lovely weekend, but also you, the viewers. Thank you so much for joining in today. See you when I see you, probably after Devconnect with more alpha. See you.
Have a good one.